What's going on, guys? We're going to look at the pre-market. Okay, we're going to look at pre-New York Open. There's great value each and every single day, about an hour before the New York session opens. That's when we get a lot of news, the numbers, a lot of announcements, this, that, and the other. There's a few things that we can do, right? So what we're looking at, I got the 1 minute chart up. Candlesticks don't look too clear because I've got everything zoomed way out. What we want to do here is, depending on when you come into the market, I'm not saying you have to come in 2, 3, 4 hours. I'm not saying you guys need to lose sleep and try to stay up trading this market all night. Realistically speaking, you can probably come in about an hour before, maybe even a little bit before that. I would say no more than 2 hours before the New York session opens. This might be beneficial to some of you guys Central Time, beneficial to you guys Eastern Time. For us here in California, it's a little bit of a grind. Requiring myself to wake up at 4:30, 5 in the morning and kind of do some trading. But there's some key benefits here to what goes on. Price action can be a little bit slower, which means one of two things. It can be a little bit more choppy. So you can be in drawdown for a little bit longer than expected on certain moves, but it's also slow enough to continue. Okay. So especially on the NASDAQ, when it's very hard to continue price, trading pre-market might actually be something of benefit. Now, what we want to do is we want to mark out those lows. We're going to want to mark out the highs up until you get to the chair. So clearly you're going to have some pre-market highs being put in before the market is open. But what I want to focus on, the window that I want to focus on, is about an hour to an hour and a half before the New York session, right prior to those news, numbers, announcements, all that stuff that gets dropped. So for me here in California, it's 5:30 in the morning. If you're on the East Coast, it's going to be at 8:30 in the morning. Each and every single morning, you're going to see some inflection point. There's going to be some some use to the market, right? Many of you guys are already familiar with this, so it doesn't sound too far-fetched. So what we're looking at here, I want to do a couple things. I want to mark out the lows as of when I sit down to the market. I want to mark out like a previous definitive swing low where we have some support. I'm noticing here support. I'm noticing support here. Noticing support here in the middle and here as well. I want to mark out the highs as to when I get into the chair. Okay, so if I'm showing up at 5:30 in the morning Pacific Standard Time, at 8:30 in the morning, I want to mark out those highs. Preferably, you want to be on the charts 1 hour before New York. So let's call it 8 a.m. Eastern. Let's call it 5 a.m. Pacific Standard. Okay. I want to mark out those highs up until that point. Those highs were going to be here. Okay. Then what I want to do, now I've got a little bit of a range. You notice how we were kind of just range bound, right? We're just trading with inside the range. Get to the bottom of the range, buy. Top of the range, sell. Bottom of the range, buy. Middle of the range, sell. Bottom of the range, buy. Bottom of the range, buy. Okay. Now that that's established, what we want to then do is we want to blow up this chart so we can see some price action. And we want to wait for those news and that numbers and whatever else comes out. Okay. So notice here, 8:23, we get a little bit of a spike. I've got to adjust this. Here is your, here is your 8:30 a.m. Candle Eastern. This 8:30 a.m. candle, you can see, look at the volume difference. Look at the size of the candles. Look at the size of the ATR. Now, again, today, we had big numbers in the morning. But a lot of days you're going to get some type of news or numbers driven movement. So maybe the extensiveness of the move is not going to be this drastic, but you're going to get some type of move where you can essentially catch a play. Now, if we kind of look at what was going on leading up to that, well, I got a 20 play here. If you don't know what a 20 play is, watch some of my YouTube videos or join the Discord. We had a 20 play here short. Both of those two paid out. Now we're looking at the 1 minute time frame. And what I want to really focus on here is that 8:30 a.m. candle. Now, leading into that print, we had a quick sell-off, but no loss of the prior swing low. So this chart is bullish or bearish, guys. This chart is bullish, right? It's in bullish context. I don't care how much this pulled back. As long as it's still trading above a prior swing low, it's bullish. You're looking for longs. As long as you're below the current overnight session lows, it's bullish, guys. It can pull back to here. We're going to bounce it. It can pull back to here. We're going to bounce it. It can pull back to here. We're going to bounce it. Until it loses a prior swing low, you're looking for the long. So as quickly as this dips down, it immediately recovers and shoots up through this pivot point that we have, right? This swing high. And you can play this one of two ways. You can allow this price to break, right? And then you can give yourself a second entry if we confirm that candle, right? Through the range, which would essentially mean you're getting in here, okay? And the model is going to be simple. You're using a previous 5-minute candle as a stop. So if I was to actually draw out a box in a zone of showing you what your range is for stop, you know, if price breaks here and then we lose this zone, you're out. Okay, you're out of the trade. Now this would be 477 to 490. You're looking at a 15-point range, right? 15-point range. So make sure you're playing size where you can withstand the 15-point movement, and you would be targeting at least 1 to 1, right? So we want to get as close to 15 points plus as possible, as long as we're staying true above this zone. You can actually, once we get at least 2 to 3 pushes higher, meaning candles, so we get 1, 2, 3 pushes higher in here, you can actually start moving your stop loss up a little bit, just kind of slowly trailing it right into profit. Next area of supply that I had here was a linear regression. So this could definitely be looked at as a take profit zone. 1, 2, 3, 4, and 5 minutes. You could take profits. And from an entry price, breaking out over 91 into 522, you're talking about a 30-point move. So this 30-point move is a one and done trade. I mean, realistically, you can turn off the screens and go live your life, or go do your 9 to 5, or go do whatever it is that you need to do for the day, because 30 points in the NASDAQ, especially if you're trading 1 or even 2 mini contracts, I mean, you don't really need to push it anymore, right? So, even if you were trading 5 micros, it's still close to $30 a micro contract. So it's $60 per micro. We're looking at $120 to $180 trading 2 or 3 micros, right? So very, very good play here. Free market, guys, where the average true range is around 7 points, 8 points at the max, 9 points, be generous, which is a lot easier to control than the New York Open, when volatility spikes and got a lot more activity going on, where average true ranges could be anywhere between 25 and 40, 50 points off the open, right? It's a lot harder to manage size and control the market when things are fluctuating up and down 20 points at a time. When we're talking about candles here that are going up and down anywhere between 5 and 10 points, it's easy to manage. Previous 5-minute or 1-minute candle as a stop, even if you're using like a 5-minute time frame, it's really no different here when you look at the 5-minute time frame. So the same rules would apply, meaning, let me just kind of zoom this in a little bit more so you guys can see it. The same rules would apply, because in theory, what you're looking for, and I can actually take here just to kind of re-show you guys what's going on, take off our stop loss box. If this is our pivot point, right, leading into that 5:30 Pacific, 8:30 candle, as soon as you get the breakout through the current high of pre-market, you're going to allow that candle to settle. And when that candle settles, you're going to enter in on confirmation, okay? So when we confirm the high, you want to get in. And the previous candle here is a 62-point range candle. You have to understand that this is CPI. So you're not going to want to give yourself 62 points worth of risk. You're going to want to just make sure that we're confirming the highs. And in this particular point, if I was to draw, an entry point, if you wanted to wait 5 minutes for a confirmation, we're going to exactly see what that looks like on the 1-minute time frame. Okay, zoom all the way back in again. You're going to see that your entry price is going to be here on this candle. So as soon as we confirm that 5-minute opening print, you're going to want to get in using the 1 minute time frame to navigate and control that stop loss. So if your entry candle is here at 8:35 in the morning Eastern, you're going to use what, guys? The previous 1 minute candle. And depending on how much risk you want to put on the table, you can even go 2 candles back. Okay. But I like using the previous 1 minute candle, and we're going to create our stop loss box. Okay. And what we do by that is just give us a visual. Is if price breaks below our zone, we get out of the trade. And notice how we put in this little bit of a run up. And if you're looking for more than just a quick scalp, well, you're definitely going to hold it. And we pull back. We're pulling back into your stop loss zone, and we bounce and we pull back into your stop loss zone. We're not losing your stop loss zone. This is a very strong zone here. 1 test, 2 test, aka double bottom here before this nice run up where you guys could have caught, realistically speaking, upwards of 50, 60, 70, 80, 100 plus points with very minimal risk. And the risk on this trade, all in all, was about 8.5 points. So, this was a 10R trade. Now, I am not up this early to trade. I have to be making YouTube videos and all this other stuff. I understand that there's great opportunities here in the pre-market, but it would turn my workday from already 10-hour workday between videos, the community in Discord, trading, my own personal capital, prop firm capital, to just I'm glued to the charts all day. But the reason why I bring it up is because the ranges are smaller and there's still opportunity. So for maybe someone that's having trouble in the New York session, maybe this time window can be your time window to make really good cash. And if it is your time window, you might have a lot of success here. So by the time someone like myself or the next person is rolling into the markets, 30 minutes prior to the New York session and getting ready to start our day, your exit, which I think is fantastic. So just giving you guys another area that you guys can maybe try to look at, maybe focus on. I've got people in Evolution Traders who are actively trading the pre-market session. If you want to come in, join the community, get linked up with them, start trading with them, start picking people's brains, definitely come in. If you want to get access to the live trading calls that we do each and every single day, where I will show my screen and we'll go over these levels in real time and try to pick trades, definitely want to take advantage of that. You guys can come into 2 portions of that. I have a free section where I'll open up the call maybe once a week to you guys. Then I've also got that 5-day-a-week call for everyone else that is in gold members. Make sure to like, comment, subscribe. I'll see you guys on